Hey guys, welcome back. It is Jack. So today in this video, what we are going to be doing is trade analysis of USO. I'm going to be going over why I took this trade, my key levels I'm looking at for take profit, and how to correctly manage this trade. So let's hop right into it. Hey guys, so the first three things that I want to go over is my first entry, the Iran and US tensions buildup, and the breakout of accumulation on the macro perspective. So when we first get into this, my entry, as you can see, is at 11 o'clock on Monday of 2/23. So as you can see, for the next around 3 days, I was in losses, down quite a bit of money, but then, I was pretty confident in this trade due to the fact that Iran and the U.S. tensions were building up. The U.S. was talking about attacking Iran, and if that did happen, I knew that Iran is one of the leading producers in oil in the world, and if that happens, the demand for oil will continuously go up, but the supply will go down because everybody needs oil. But if the supply starts to dip a little bit, because Iran won't be able to serve oil to the U.S., then that causes a demand spike, and that causes prices to go higher. So that's kind of the first analysis that I was looking at. That's why I really wasn't too worried about the price action. And then the second thing that I want to look at is the breakout of the accumulation phase. So this is the accumulation phase right here. This is the entire accumulation phase that topped at 6/7/2022. So it has been about 1,365 days of chop, of consolidation between the range high and the range low. Range high being 92, range low being 58 or 60. And we get the breakout, we get the setup for the breakout, and then the U.S. announces that they will be attacking Iran, and that is already going to cause panic fears and whatever else it causes, war. So it causes panic. So then people are starting to get out of this, but then again, people realize the supply of oil is now going to be diminished, so the demand will kick in and prices will go up. So I had a profit target of $100 for this trade, which will be taken out once the market opens in an hour and 15 minutes. So yeah, that's kind of it. That's kind of the three things I looked at for my first entry. So now we're going to go over my second entry. So my second entry was basically just a sizing up a position. This is when it was confirmed that attacks on Iran will be happening, and did happen. And with that knowledge, I thought, okay, well, maybe I should be going along on oil again, because if the U.S. is attacking Iran, then that shows war. And what does war mean? War means profit. As unfortunate as it sounds. So I then ended up taking trades at the 3 o'clock hour, and yesterday had a pretty good bounce up, and then today we're going to have an even better bounce up of almost 7%, 6.5% pre-market to that 102 range, and then my take profit from my first entry was the $100. So I'm going to be taking out some profits and then letting the rest ride. So that's kind of it from me on this side. It wasn't really based off of price action or anything. It was just based off of fundamentals, based off of the Iran and the U.S. war, and that was it. So yeah, that's basically it. I hope you guys enjoyed this video, and I will see you guys in the next one.